wasn't bad. It wasn't bad. We actually got rain.
Rain.
Yeah, like it hasn't rained in like 50 some days.
Wow.
Yeah, it was a big deal.
Wow. No, I can imagine. Was it like sustained rain or was it like one of those just dumps and later clouds moving
It
on?
didn't rain hard, but it did rain for probably an hour.
That's good.
No.
So hopefully it doesn't just run off and it actually penetrates a little bit out there.
Oh, I'm sure it's already been totally absorbed, but we're supposed to get some more today.
Right on, right on. All right, very good. So, headline wise, there really is not anything new within the headlines other than them just repeating themselves. From China's energy crisis based on the heat wave to central bankers and Fed members screaming, "We ain't done raising rates." The only thing that was really of note, which, for those of you that have been in the Roadhouse for the last week or so, you've been hearing me scratch my head over and over again. There's an article in the Wall Street Journal yesterday after close basically stating that the market is playing chicken with the Fed when it comes to rates. The market does not believe that the Fed is going to continue to raise rates, and this game of chicken is right now at there's no more room as far as this little head-on collision that's taking place. Found it extremely interesting overall. The article in the takeaway is that the fundamental rule in the market is not to fight the Fed. This rally, this move, this insistence that there will be QE sometime next year is something that is definitely doing that. It is going well against the don't fight the Fed thing. So I guess ultimately we have to sit here and wait and see how it's all going to play out. AMAT reported yesterday, while their results were good, if you listened to the call, you heard over and over again how their customers are moving their orders around, delaying orders. Um, they're not exactly handing money over right now, which we'll see how that plays out. Luckily for AMAT, they have a large order book. They have a decent sized backlog. So again, we have to see how some of these things are going to play out. But overall, we have to continue to look at these earnings, that none of the earnings that really came through, with the exception of maybe 5, 6 companies, were just absolutely mind-numbing spectacular. And so as this earnings season winds down, we automatically have to start looking towards next quarter to see how we're going to do. Where are we at? What's going on? The last big dog that I can see that reports, NVIDIA reports on Wednesday. So I think SemiFlow could be interesting going into that ER. I think it's something that we have to keep in mind. Additionally, Bitcoin absolutely took it in the face overnight. Like that's a pretty intense. That's an 8.5% drop on Bitcoin. So we need to keep an eye on that over there. That is the ultimate risk on, risk off instrument within the market. I don't think there's anything more risk on, risk off than Bitcoin. Dollar is up today. VIX is up today. We also had several dark pools in VIX related products yesterday. So we should keep an eye on those levels at the same time. Overall, we have OPEX, which means there are no guarantees. We can easily rocket shot back up and go play around with that 428.50. We can do that. We can go down just as easily at the same time, or we can trade sideways until infinity, making everybody really, really pissed off. That is the day. That is OPEX. That is what we have in front of us. For me specifically, I'm going to be watching Apple flow. Apple is Kong. There is no question. Amazon, I'll be watching that flow also. Started to see that they were building out Apple 170 puts for next week. I want to see whether or not that continues, how actionable that becomes as the day kind of moves on. Several of us were in those earlier. We put profits on those. So maybe there's an opportunity to re-enter that type of play. Ender, you jumped long, got a nice little run over here, buddy. We're sitting here rubbing up, I believe, on the 89 on the 3 minute. What you got for us?
Yeah, so the reason I went long there, and I posted it in chat, but I actually have three fibs that that come into play there at 42.46, right in that area, 42.45, 42.46. So that's kind of what I was playing off of. You got the 200 on the 60 minute below that, not far below 42.38. So we're currently sitting at 42.51. We know 42.54 just above. There's a fib there, and that was a decent level previously. So I want to see us get above that 42.54. Above that, I got 42.73. That's where you've got that was a pretty big level as well the last couple days. 42 that area 42.72 is the 20 MA on the 60 minute, and 42.73 is the 50. So that's the level to watch. Above 42.54, start looking at that 42.73. And then above that, we've got the trend line, what was trend line support in the channel that we fell out of, but that doesn't come in until above 4,300. So
Okay.
in the very near term, we've got that 42.54 and then 42.73. Just below us, we've got, like I said, 42.45. I got three fibs that line up there. And then again, 42.38 is the 200 on the 60 minute, and then a fib at 42.21. And then below that, probably test 4,200.
All right. So just to kind of pair off with you at the same time, we have a Fed speaker set to speak here in about 2.5 minutes. We'll see. No, who knows what they're going to say, but they've been pretty consistent. Using UVXY, considering that we got dark pools into several, I guess those VIX-related ETFs yesterday. In looking at that, I think we have to look at this 921 area as, and then 930, obviously. So we're talking about within pennies over all of each other, but that area right in through there is going to be pretty important for it to stay compressed and underneath. It getting up and over 930 with any level of volume is going to be pretty dynamic as far as a potential spill that we can see within the market. I can't and I'll turn it over to Stockington here in a moment, but I can't reiterate enough. The number one rule within the marketplace is do not fight the Fed. We are 6 for 6 from Fed speakers over the last 2 weeks since CPI came out, and even before CPI came out, including global central bankers around the world, basically saying we are going to continue to jack rates. We are going to continue to jack rates. And the only thing that we're hearing in a lot of ways is from these mysterious people that we don't even know, I can't even get real quotes from these people, is, yeah, no, we're going to have rate cuts next year. That's what we keep on seeing and keep on hearing. Now, ultimately, the truth lies within the charts and in the numbers and within the flow. That's where the truth lies. The narrative can help support those things either way. But there is a real disconnect right now within the market as far as what is actually going on. Now, as IO has been lasered in, we basically begin QT next week. Not next week, I guess next week, 2 weeks from now. That means money's coming off the books. That's what that means. So how we position, where we are, where we go going into the end of the year, these next 3 to 4 weeks are going to be very, very important as far as being able to play whatever it has. So if you were long off the bottom, you're sitting here pounding your chest and you were buying the dip. What you can't do is get caught off sides. You can't do that. So make sure that you are really, really, being diligent in your process, diligent as far as really, really taking vendors' lines into account and respecting them both from a support and resistance standpoint. Make sure you are doing that. Stockington, what else do you have for us, buddy?
Hello, good morning. Don't fight the Fed, don't fight the trend. Let's see. So I posted new charts and new levels because we have a little bit of a move down. But kind of like Bender has taught us in the past, I'm not like reinventing anything with these new lines. I'm just kind of just shifting new triggers basically based on the move down. So Apple found support at 172.2 exactly, so that must be significant for somebody. So we'll see if we break that to the downside. Could be the entry to go short on Apple, and then I'd adjusted fibs, which left 173.45. So I posted the chart above. That could be a signal to take Apple long. I think everyone's been watching Apple on this massive run, just like waiting for, some kind of signal of reversal. So we'll see what happens with that. Like you said, we'll watch the flow. Apple's calm. BA made the list because it was getting repeat dark pools last night at 168.69, which it rejected right off that. So I'll be looking to potentially take BA short with some downward continuation if it breaks yesterday's lower orb, 165.8. And then looked like a pretty important fib line I had, 167.6. Potentially take BA long through if it breaks up through that one. And then I had coin. Been watching coin all week, and coin had a pretty significant push down overnight. Found support at 75.3, so potentially take coin short if we break below that. Or I also had a line, psychological round number 77 flat on coin. Other than that, just gonna take it slow, watch the flow, go from there.
Yeah, and I'm glad you said flow a couple of times with that. With OpEx, we're going to see a lot of batshit crazy stuff. A lot of stuff that's rolling off today. We could see some positioning moving into next OpEx, if you will. So it's like, make sure you are being an honest broker when you are looking at everything and you are taking a real account for the expiration dates. Make sure you are doing that. Don't get overly excited if you see something that looks to be in your direction that's expiring today with massive money. Don't be the donkey. Make sure you are being an honest broker with flow. Make sure. Ender, do you have anything else for the peoples?
Excuse me. No, I don't think so. I think we've pretty much covered. I guess what I'll leave with is I think we kind of talked about this on Wednesday that Theta Killing Wednesday could be flattish. We were expecting flat to down yesterday, expecting some weakness. I was kind of expecting some weakness overnight, and I'm looking for ups today. So we'll see what we get. Like you said, anything can happen, and it's options expiration, and there is some conflicting, some of the indicators and stuff that I use that I look at. There is some conflicting, the setup is there to go either direction, but the fact that we came down and tapped the 200 on the 60-minute, I like, and I think as long as that holds, then I think we'll be in okay shape. But I agree with you. I mean, today can get, today can get interesting. I need to go back and look at. I think there's a lot of money in options that are expiring, like one of the bigger OPEXs that we've seen in a while. But I need to go back and check that out.
It is absolutely loaded with calls.
Yeah. Okay.
Loaded to the fucking gills in calls.
So when we have that, right, it makes it harder to move up, for sure.
Mm-hmm. Yep. Absolutely. Especially if you were. So yesterday I saw about 8 to 10 million come off days expiring SPXW calls. They basically got out yesterday. So it's like some of that came off. In my opinion, in looking at it overall, first they pumped Apple and they were moving out on calls that were further dated and into this OPEX. Then they did the same with semis yesterday. Semis right now look like they could potentially take it in the face. So it's like they've been making moves under the hood all week long coming into this OPEX. What we get is something different, and what the setup is going into next week, again, something different. We just have to be aware of it. And it's like, look, can I say one more thing, Bender?
Of course. You're going to anyway.
Okay. I've been basically full on bear since that CPI report came out. I really have. Every play that I put on it has been a bearish play. I've done okay. But to be wrong, and I want people to understand this, you have to be honest with yourself and honest about what it is. Me being as bearish as I was forced me to miss a pretty spectacular upside move off of that CPI print, even though it was a bogus print, even though it was so full of shit, it was ridiculous. Doesn't matter.
Doesn't matter.
Even if we sell down today, okay, even if we go down and finally fill that gap over the next few days, the reality is, conceptually, I may have been right. Price, I was wrong. Strategically, I was wrong. And instead of being able to max the gain and profit from the trade, I have to play catch up before I actually score on some of the positions that I opened last week. There's a lesson to be learned, I think, for everybody, and I like to be transparent in sharing it. You can only be right when you hit it right. You are not right 4, 5, 6, 10 days later. You can't pound your chest. You got to shut the fuck up. All I have to say about that. That fair, Bender?
Yeah, I mean, there's two parts to it, right? There's direction, but there's also timing. You can absolutely be right on the direction or what's going to happen, longer term, but you can get face fucked in the process trying to play for that if your timing's off. And it doesn't do any good to be right on direction if you're just completely, if you miss the timing and you don't trade the technicals and the levels because you have a bias, I mean, that's what gets you.
That's what gets you in trouble.
Yeah.
And it also invalidates your ability to pound your chest and say that you're right, because you can't be right if you were after you were wrong for multiple days.
We've said that before, right? Like exactly. You don't get to be wrong for like 200 points and then it moves your direction. You're like, see, like, well, you can't make any money that way.
No, you can't. You're trying to scratch back to even and maybe come out with a couple of nickels on the other side. It's like, so again, once again, I just want to be clear with everybody, because I think there's a tendency sometimes for people to get overly in love with themselves and them being able to predict and call the market. If you do not hold yourself accountable, you will get victimized worse than you actually ever thought that you could. You have to hold yourself accountable. You cannot declare victory after being wrong, or let's say whether it be 200 points, or at least in my case with that CPI print, that was about 150 points that I got steamrolled. I wasn't in all the way because of that gap up. Then after the gap it was, but that was still about 100 points that I was wrong. So even if we come back down, I can't declare victory. I can't say, hey, I was right, you guys were wrong. And anybody who does that, they don't have a long-term future in the game. Accountability is everything. Bender, thank you, buddy. Stockington, thank you. Let's be smart, let's be wise, let's be sharp. And above all, it is Friday. Friday.